All right, so very quickly, I'll try as much as I can to show quick chart examples of liquidity. Okay, so we'll be looking forward to seeing old highs, old lows, equal lows, trend line phantom as part of our external liquidity concept. Okay, and then in a video, probably in the coming week, then we should be looking at the concept of fair value gap or the concept of imbalance as internal liquidity. Okay, so this was a trade I took today. Okay, forget the movement of this reversal. Okay, it's a sell to buy model. A buy to sell model rather, because I still strongly think my sell is still in place. Okay, however, I'm taking first partials here, taking second partials, taking third partials. I'm taking 3 profits off this trade. So at the moment, it is totally risk-free, and then I have the lowest lot just running because I kept milking, and then taking all the partials I could take from this position. Okay, so let's just let that be. But then I'll talk about why I took this entry, but let's talk about what we have on deck today. Okay, so I said old highs automatically become liquidity. Okay, so now I would not be trying to analyze this chart or tell you what I did. I would just be marking out liquidities. Okay, when we begin to talk about confluence, okay, now if you observe, I am dealing with each concept as an individual concept. Towards the end of this month, or all right, let's try not to exaggerate. By next month, I should be done with introducing concepts, and the month after, or by the ending of next month, we should be talking about confluence, how we can put all of this together and create a story for price and be able to analyze the market and take proper trading decisions. Okay, but in the meantime, we are just trying to look at these as single concepts before we begin to have them together to birth a holistic view to what we should see in the market. Okay, so let's go together as quick as we can. So we are looking out for external liquidity. Okay, equal highs, equal lows, old highs, old lows, trend line phantom, basically. Okay, so let's make progress. Now, this area here was a what? Equal high that got taken out. Okay, and then what happened? Price violated this level and went up, tapped into liquidity. Okay, liquidity that was above here. Okay, the essence of breaking this level was to tap into liquidity and then continue to the downside. Okay, even if you had to reach into our demand level, okay, when we begin to talk about supply and demand, then we'll begin to marry the concepts. But for today, we are just trying to see them individually. Okay, so old low automatically became what? Liquidity. We ran through old lows, continue to the downside. Okay. Okay, I think let me go from behind. Let me go from what we had behind. This could be seen as a trend line phantom, right? And what happened? Broke to the downside only to tap into liquidity. If we look clearly at this point, we have a double bottom formation. And I told you this is common liquidity. Okay, so what did we do? Retail traders would have been expecting a third touch around this region that should sponsor further sales. Okay, but we failed to do that. Yes, we had to go to the upside, but then we had to induce this level. We had to absorb the liquidity on this level, take liquidity from this level that should serve as fuel that would carry price to the upside. Okay, now on the journey to the upside, this level could have been equal highs. Okay, if I want to marry these levels, and then what did we do? We violated that level. Okay, broke above it slightly with this week. Let me zoom in a bit. Okay, so yes, we tapped into liquidity here, grab liquidity here, and then deliver to the downside. Okay, automatically it turned this to a what? Old high, and old high is what? Liquidity. So we came back up, grab liquidity here, creating a double top formation that we took out in this position. Okay, so we grab liquidity above here, filled fair value gap, and then tapped into this point of interest where we had our demand level, and then we sold expressly to the downside. Okay, now if you look at this carefully, you can also see that this here is also a trend line phantom. Okay, which is magnet to price. Price is attracted to liquidity. Liquidity draws price. Liquidity interests price. Okay, now below here is a double bottom formation that is supposed to be a buy pattern formation. Yes, so we actually had the impression that we are going to buy, and then some people would have been looking to take price upward already, but price failed to do that. What did we do? We came back below this level only to grab the liquidity that we had inside of here. Okay, grab liquidity and then deliver expressly to the upside. Okay, the same thing happened here. Double top formation, people will begin to think that we are willing to take sellers already to the downside. So early sellers would have been piling in positions, going in heavy, multiple positions, stacking as they call it, and all of that, only for us to come expressly to take out this level, okay, because we had to absorb liquidity. And like I said, liquidity is fuel for price. Okay, let's go back a bit. Double bottom formation, right? I talked about that already. And then I talked about in our simple structure, okay, all old lows are liquidities in a downtrend. Old lows are liquidities. This is a clear external liquidities, okay? Old lows are liquidities in a downtrend, okay? All right, this is on that trade I took. Let's try and see why I was interested in this trade, okay? So old lows got taken out here at this point, right? Okay, so this was like a triple bottom formation, 1, right? 2, right? 3, okay? So gave you an impression that we are going to buy already with this leg, okay? And all of a sudden, what happened? They dumped to the downside, right? And then continued the buyers to tap into some level of this block, but did not fully mitigate the block, and then continued to absorb liquidity on this side that should deliver them expressly into the block. So automatically, this becomes an old high that is liquidity, and price grabs it and then taps finally into the block and begins to sell back to the downside. Now, when we were selling back to the downside, why did I have this target in mind? Because automatically this becomes an old low. And then we have this phantom trend line on this level, three touches on this phantom trend line. That was a call, a draw on price. Okay, so we came to this point and then we invalidated this level, right? So why didn't we just continue to buy from this level? Why didn't we just buy all the way from here? We have to invalidate this level to tap into liquidity and then mitigate our other block inside of this POI at this point, right? And then we went to high heavens, okay? The same thing, the same concept over and over and on, okay? Old low became liquidity, tapped into it before we began to drop. Now, okay, this is another interesting one, another very interesting one. So this should have been a very fine buy position for retail traders, okay? First touch, everybody was waiting for second touch, and then what? Third touch. So after the third touch, they were willing to take buyers already. So they were loading positions, multiple buys, multiple. Okay. Now, some of them are even calling their friends. Hey, check out Step Index. Step Index is moving. We have this triple bottom formation. We are going to buy. We have been selling for so long. In fact, the whole year, Step Index has been selling. We should have buyers, triple bottom formation. Let's hit the market. And then everybody was taking multiple buy entries on this position. Now we got to this level and then we gave them a form to feel that we are actually taking price upward. What did we do? It was just a short inducement, and then we dumped price to the downside, grabbing all of this liquidity that we have to this downside, all of this liquidity, all the positions we had here for buyers, and then below this position, we had people who had set pending sell orders. Okay, so we filled finally all the sell side liquidity on this bottom, and then we pushed price all the way back upwards as fine as we could. Okay, so everybody who expected to take price on the concept of triple bottom or quadruple bottom or double bottom at this point had gotten stopped out already. Simply following the concept of liquidity. Liquidity is attractive to price. When price sees liquidity, price is excited. Price feeds on liquidity. Price likes to eat liquidity. Price is always going after liquidity. Take liquidity from the sell side, deliver to the buy side. Take liquidity from the buy side, deliver to the sell side. That is how price will continue to move until we get to a point of interest that will put in the momentum, and then we move aggressively to either the upside or the downside, depending on the trend of the market or the order flow. Okay, so let's just see some other examples and then we will be done for that. Okay, let's see some other examples and we'll be done for that. All right, good. This was a nice one. Very nice one. Okay, old highs are liquidity. Old highs are liquidity. Okay, so this is here an old high, right? Firstly, it was used as a demand level, a supply level rather. We tapped into this level and then we had an amazing sweet move here to the downside. Okay, and then we tapped into this level of demand here. Oh, sorry, my drawings are not so fine. I'm not using a pen. Okay, and then we continue to the upside. Okay, now as we begin to move to the upside, it means the order flow inside of this substructure has changed and it is bullish. Okay, so it means that automatically this becomes old high, this becomes old high. Okay, so everything we are targeting here becomes liquidity that looks very attractive to price, and price had to take all of them out. old high, external liquidity, okay, all the way where to this point where we had our block of supply, and then we sold aggressively to the downside. Okay, let me get more positions for you, okay, nice, great. Now this is also an amazing entry. This is also an amazing form of liquidity. Okay, so if we mark this through, this should sit well for retail triple bottom or double bottom, as the case may be, right? So let's mark it through. So this point here, right? Okay, so what happened? First touch, second touch, we should have had a buy from here, right? What did we do? We broke through it and then we continued aggressively to the downside. Liquidity, simple liquidity. Okay, now another fine example we have here, pretty double bottom formation, right? Bottom one and bottom two, which are supposed to act as a buy. But what happened? Yes, we reacted up this level for a while, and then we continued expressly to the downside, taking out liquidity. It is simply how price works. Liquidity is what controls the flow. Liquidity is the gas, it is the energy, it is the momentum that price needs to move. Okay, so double tops, double bottom, triple tops, triple bottom, and the likes of them are all liquidity. Now, price must not take out a certain liquidity if it does not have need to. Price must not take out a certain level of liquidity if it does not have need to. Okay, so bear that at the back of your mind. It is never a must that price, except we have orders. If the order flow is bearish and then we have liquidity to the upside, most times if we don't have a supply zone that has to be mitigated above this liquidity, price will continue in the bearish order flow until it starts its overall reversal, and then we'll close in on all of that. But until then, those areas are not important to price. Okay, so we have another kind of liquidity here, which is still our double bottom formation as our stop horns. Okay, so we got hit nicely and then continued bearish. Okay, I'm trying to get something a bit more complex. All right, nice. This is our trend line phantom. Okay, as you can see, we had price retest and bounce, retest and bounce, retest and bounce, which was supposed to be a fine zone. Okay, which was supposed to be a very fine zone. And then what happened here? Let's extend this a bit. I need to see price action. All right, good. So this was our last point. Let me take it off a bit. So this was our last point of resistance, right? Which could have acted off as resistance for sellers. But then by a few weeks, we just violated it. So make sure that we take out positions on that level, absorb liquidity. And what did we do? We continued downward to take out all of the buy positions that we had below this level for people who we are yet to probably take profits or then break even or all of that. But then we still had tons of orders. If either as break even, or you have shifted your stop loss to entry, or you have taken some sort of partials and then you've adjusted your stop loss to this level, we still had orders inside of here that served as liquidity to be taken to the downside. Okay, so it is nothing too extra, it is nothing too confusing. It is just the behavior of price. It is just the behavior of price. Price is constantly drawn to liquidity. Okay, so what did we do? Yes, we are going to sell. Okay, so what did we do? We took out liquidity to the downside, right? And then went back up to mitigate this block, and then we continued bearish. So this was full. Okay, liquidity, and so on and so forth. We can just keep marking series and series and series of liquidity that we have here on the chart. Okay, this could have been another one. Okay, this should have been a nice level of resistance for retail. Okay, we retested multiple times, and then we are consolidating at the points. Okay, to show you that the buyers are finding it difficult to take price up. We are struggling at the point to break through. What happened all of a sudden? We wicked through it. As if that was not enough, we had to come back for a fine retest and then tap into liquidity finally, grab all the liquidity we could grab at this point, and then move to the downward side, right? So this is also an example of stop points. At this point, you begin to say, yes, I was correct on the trend. Yes, I knew it was going to sell. My broker manipulated price and then hunted my stop loss. That's why they kicked me out of the market. But then overall, I was still very correct. It is not enough to be correct. So you were correct on the market, but you had made a loss on this point. It doesn't make sense. Okay, so on the long run, we'll be concerned about how to know when to come in on price, when to react to price, when not to react to price, what to expect what to expect while we trade, what are we looking out for exactly. Okay, so we do not get the excuse of I knew the direction and my broker stopped me out. Okay, so I want to believe that I've been able to sell the message of liquidity to you guys. Okay, so this is a double bottom, okay, which was actually a fine move that could have started vibes to the upside, right? W pattern formation, if you learn pattern formation while trading, W pattern formation is actually a buy pattern formation. But what happened? Price came through, tapped in on liquidity, and then probably mitigated a block somewhere here or the distance to the left, and then continued to buy. Okay, so for those of us who we are taking buyers of this point, you get stopped out, then you continue your direction, and then retail calls this fake out. We are just grabbing liquidity. Price finds liquidity, very interesting. Okay, price finds liquidity, quite interesting. So this is what happened. We tapped into a demand level and then we continued to the upside. Okay, so as small as this would look, this could be, this was a very amazing trade because 40 pips to the upside, because after this move happened, I would be expecting definitely that this would become liquidity for price to grab on before moving forward, because there should be some block inside of here that would cause the move to the downside. Okay, which was actually what happened, and then we sold off. Okay, so as time goes on, okay, right, another one, trend line phantom liquidity, right? What did we do? Came, absorbed all of that, and then went to our target, continue to this direction. So it's as simple as it is. Okay, this became an old high for price to violate, tap in liquidity, and then mitigate a demand zone inside of here. So wow, mitigate a demand zone inside of here and continue to deliver to the downside. So that's what has been happening throughout the step index. Okay, I think one of these days, probably within the coming week, I'll take out time to do a fine expository on what step index has been doing for the past weeks, and then how we would have been able to take advantage of all the very amazing moves that has been happening on step index. For those of you who have been following me, I think this period this has been my best time trading step index back to back. It has been my baby so far, and then it has been very amazing. Just following simple concept of structure, liquidity, and inducement. So I want to believe I've been able to sell the concept of liquidity for you today. Okay, now what I expect of you guys to begin to do is to get onto your chart, tradingview.binary.com, and begin to backtest, not necessarily taking trades. Okay, just backtest, like what I did right now with you guys is simply backtesting. Okay, go back and see how price had reacted to your double tops, your double bottoms, your resistance level, your support levels, your equal highs, your equal lows. Go back and see how price had reacted to them. Mark them out on your chart and see them play out for yourself. Okay, so when I begin to talk about the concept of a fair value gap, and then I begin to talk about the concept of mitigation, we will now marry all of them together with what we have, and then make a fine trader out of ourselves in course of this series. Okay, so I appreciate you all for your time, and I believe this is enough to help you understand the concept of external liquidity. In our next series, we'll try as much as we can to deal with the concept of internal liquidity, which is the concept of fair value gap or imbalance or inefficiency, as the case may be. But do not forget that liquidity is the fuel, is the gas, is the momentum, is the drive. It is the energy that price needs to move, okay? And price is attracted to liquidity. Now, also note this, that price would mitigate internal liquidity. Price will always mitigate internal liquidity before heading for external liquidity. Or price will go towards an area of less concerned liquidity before heading for an area of concerned liquidity. So you may see a double top of formation or a double bottom, and you expect price to just read it all of a sudden. Okay, like when we had price coming down here, we would have been expecting that the rate was going to begin from, probably the rate would have begin from this point, okay, and then we'll just drop, okay, to take our liquidity. But then we had an old high here that needs to be taken out, okay. So price will go to an area of less concerned liquidity first and grab this guy before it comes to an area of common liquidity where everybody can see, okay. Because when it goes to an area of less concerned liquidity, people begin to feel that a trend has changed and they expect this move and this move to happen, okay. So even the smart money traders get induced, and then all of a sudden price goes in and then take all of that liquidity and then taps into a point of interest before we actually deliver to the upside, okay. So we grabbed from buy side and we delivered to the sell side, okay. Again, we came back up here and here to grab, and here to grab from buy side, right, and then we delivered to the sell side, okay. Now we came back up here again to grab all of these buy side, all of these buy side highs, all of these buy side highs, right? And then what did we do? We delivered to the sell side, taking out sell side, taking out sell side, taking out sell side, as the case may be, okay. So I want to believe I had done my best to explain this concept as we anticipate the next video to come on. So get in your charts, begin to look out for liquidity. From next week, I will begin to give us assignments so we can actually start making progress. Thank you very much, guys. Do have an amazing evening. My name is Dr. Banks.